Welcome back to the Deep Dive.
Oh.
This is episode 3 in our series, Business in the Real World. Remember our deep dives into market forces and business strategies.
Yeah.
Well, today we're getting down to brass tacks.
Okay.
The very foundation of business.
Okay.
Ownership structures.
That's right. Because whether you dream of launching your own venture or just want to decode the business world around you, understanding ownership is key. It's like looking under the hood to see what makes a business tick.
I like that analogy.
Yeah.
And to help us on this deep dive, we're turning to some fascinating notes for a podcast episode titled Lesson 3, A Deep Dive into Business Ownership. I'm already intrigued.
Right.
Why does one person choose to go it alone?
Right.
While another brings in partners?
Yeah.
Or even goes public?
Yeah, these are great questions.
What's the difference between an LTD and a PLC?
And the answers can be surprisingly revealing. The choice of ownership structure isn't just a legal formality. It has a ripple effect on everything.
Okay.
From control and liability to funding and even the company's culture.
Okay, so let's unpack this.
Yeah.
First things first. These notes emphasize that every business, no matter how big or small, has to pick a legal structure.
Right.
What makes this choice so crucial?
Think of it this way. The legal structure is the DNA of a business. It determines how the business interacts with the world, how decisions are made, and who ultimately bears the responsibility if things go south.
So it's not just a box to tick on a form.
No.
It's a decision with real-world consequences.
Yeah.
Let's start by diving into the simplest structure.
Okay.
The sole trader.
Right.
This is your classic one-person show, right?
Right.
Like a freelance graphic designer or a neighborhood plumber.
Yeah.
Working for themselves.
Exactly.
Yeah.
A sole trader is the most straightforward setup.
Okay.
You are the business. You call the shots.
Okay.
You reap the rewards. And yes, shoulder the burdens.
That level of independence must be appealing to many people.
Yeah.
But I imagine there are downsides, too.
Absolutely. The biggest drawback is unlimited liability.
Okay.
If the business incurs debt or faces a lawsuit, your personal assets are on the line.
Okay.
There's no separation between you and the business.
That's a lot of pressure.
Yeah.
So what happens when a sole trader wants to expand, take on bigger projects, but needs another set of hands? That's where partnerships come in, right?
Precisely. A partnership is like a sole trader with reinforcements.
Okay.
2 or more individuals pool their resources, share responsibilities, and hopefully multiply their chances of success.
So like a dynamic duo of chefs opening a restaurant or a team of architects collaborating on a project.
Right.
There's strength in numbers.
Yeah.
But are there potential pitfalls to consider?
Of course.
Okay.
While a well-structured partnership can be a powerful force, it hinges on trust and clear communication. Disagreements between partners can quickly derail the business. And remember that unlimited liability still applies, and it's shared. So a partner's actions can have legal and financial repercussions for everyone involved.
So partnerships are best suited for people who truly complement each other and have a rock-solid agreement from the outset.
Exactly.
Now let's move on to what I think of as the more official business structures. Companies. We're talking about everything from local startups to multinational corporations.
Right.
What sets them apart from sole traders and partnerships?
The key differentiator is the concept of limited liability. A company is a separate legal entity from its owners, meaning it's responsible for its own debts and obligations.
Okay.
The owners or shareholders are generally protected from personal financial risk.
That's a game changer in terms of risk management. But there's more to it than just company, right?
Right.
There are different types.
You're right. Under the umbrella of companies, we have 2 main types.
Okay.
LTD, which stands for Private Limited Company, and PLC for Public Limited Company.
Okay.
Let's start with LPDS.
Okay, so LTDS.
Yeah.
Who typically chooses this structure?
So think of an LTD as a tightly knit group of owners, often family members or close business associates. They divide ownership into shares, which are typically not traded publicly. It allows them to raise capital, make decisions efficiently, and still maintain a good deal of control.
That sounds like a good option for a business.
Yeah.
That values privacy and close collaboration. Now, how about PLCs?
Yeah.
Those are the companies we see listed on stock exchanges, right?
Precisely.
Yeah.
PLCs are the big leagues. They offer limited liability, like LTDs, but their defining feature is that their shares are traded publicly on the stock market. Anyone can buy a piece of a PLC.
So it's like owning a tiny sliver of your favorite tech giant.
Right.
But that must come with a different set of challenges and responsibilities.
Absolutely. Going public gives PLCs access to vast amounts of capital, but it also exposes them to market fluctuation, regulatory scrutiny, and even possibility of hostile takeovers. It's a high-stakes game with a unique set of rules.
Wow, so the choice between an LTD and a PLC is a big one.
Yeah.
With significant implications for how a company operates and grows.
Right.
But before we delve into that, I'm curious.
Yeah.
Not all businesses are about profits, right?
Right.
What about organizations focused on social good?
Right.
Or community service?
You're talking about not-for-profit organizations. Think of charities, community centers, educational foundations. Their primary goal isn't profit, but they still need a legal structure to function effectively.
So even if you're running a soup kitchen or advocating for animal rights, choosing the right legal framework is crucial.
Absolutely.
Makes sense.
Yeah.
But with all these options,
right,
how does anyone decide which structure is right for them?
Yeah.
It seems like there are so many factors to consider.
You're right. It can be overwhelming.
Yeah.
There's no one-size-fits-all answer. But there are some key questions to ask yourself when making this decision.
Okay.
Want to hear more about those?
Absolutely. This is where it gets really interesting. But first, a quick message from our sponsors.
All right. So you're ready to launch a business?
Yeah.
And staring down the barrel of this big decision.
Right.
Which legal structure is the right fit? Where do you even begin?
It's almost like choosing your character class in a video game. Each one comes with its own strengths and weaknesses.
Exactly. And just like in a game, understanding your play style and goals is crucial. One of the first things I always ask people to consider is their risk tolerance.
Okay.
How much personal liability are they willing to accept?
That makes sense. We talked about how sole traders and partnerships expose you to unlimited liability.
Right.
Your personal assets are on the line.
Yeah.
That's a big gamble, especially for a fledgling business.
It is. And for some entrepreneurs, that level of risk is simply unacceptable. That's where the limited liability offered by companies, both LTDs and PLCs, becomes a major draw. It provides a safety net between their personal finances and the ups and downs of the business.
So if peace of mind is a top priority, a company structure might be the way to go. But what about control?
Right.
Some entrepreneurs are driven by the desire to be their own boss, to call all the shots.
Absolutely. If autonomy is your driving force, a sole trader structure gives you that ultimate freedom.
Okay.
You make all the decisions from hiring and firing to product development and marketing strategy.
But if you're willing to share the reins, maybe you recognize the value of diverse perspectives or simply need help with the workload, then a partnership or a company with multiple shareholders might be a better fit.
Right. Partnerships thrive on collaboration and shared decision-making, while companies often have a more formal management structure with a board of directors representing the interests of the shareholders.
Speaking of shareholders, it seems like companies are the best option for raising capital.
Yeah.
Especially if you have ambitious growth plans.
You're hitting the nail on the head. Companies, particularly PLCs with their access to public markets, have a far greater capacity to raise capital than sole traders or partnerships. They can issue shares, secure loans, and attract investors who believe in their vision.
But that influx of capital comes at a price, right?
Exactly.
It's not free money.
With outside investment comes dilution of ownership, the need to answer to shareholders, and the pressure to meet their expectations.
Right.
It's a trade-off that many successful companies embrace. But it's important to go into it with eyes wide open.
So finance is another critical factor when choosing a structure. Are you bootstrapping your startup with savings and sweat equity?
Right.
Or are you seeking venture capital funding to fuel rapid expansion?
Yeah.
Your financial needs and goals will play a huge role in this decision.
Absolutely. And let's not forget about the practical side of things.
Okay.
The size and complexity of the business itself. A one-person Etsy shop selling handmade jewelry doesn't need the same legal structure as a global tech company with thousands of employees.
I imagine starting simple and scaling up as needed is a common path for many businesses.
It is. Yeah. A sole trader setup might be perfectly adequate in the early stages, but as the business grows, adding partners or even transitioning to a more complex structure like an LTD or PLC could become necessary to manage the increased scale of operations.
Okay, so we've covered liability, control, finance, and business size. Are there any other factors that aspiring entrepreneurs should consider when choosing a legal structure?
There are a few more nuanced aspects that can make a big difference.
Okay.
One is the tax implications of each structure.
Right.
Sole traders and partnerships are taxed differently than companies. And understanding these nuances can impact your bottom line significantly.
So it's worth doing some research or consulting with a tax professional to figure out which structure is most advantageous from a tax perspective.
Definitely. And let's not forget about the long-term vision for the business. Do you plan to run this company for the next 5 years and then sell it? Or is this your legacy, something you want to pass down to future generations?
Those are big picture questions that can influence your choice of structure. A company aiming for an eventual IPO might choose a different path than a family-owned business prioritizing continuity.
Exactly. And finally, consider the administrative burden of each structure.
Okay.
Companies, especially PLCs, come with more complex reporting requirements and regulatory hurdles.
Yeah.
Are you prepared to navigate those complexities, or would you prefer a simpler setup?
It sounds like choosing a legal structure is a multifaceted decision. With far-reaching consequences, there's no easy answer.
Right.
But by carefully considering these factors, risk, control, finance, size, taxes, long-term vision, and administrative burden, entrepreneurs can make an informed choice that sets their business up for success.
I couldn't have said it better myself. It's about finding the structure that aligns with your values, goals, and resources, empowering you to build the business of your dreams.
This has been incredibly insightful.
Yeah.
I feel like I've gained a much deeper understanding of the legal and strategic considerations behind business ownership.
Good.
But what about the human side of things? We've talked a lot about the technical aspects.
Right.
But aren't there personality traits or leadership styles that lend themselves to certain structures?
That's a fascinating question.
Yeah.
And you're right, there's a definite psychological dimension to this decision. Some people are natural-born solopreneurs, thriving on independence and taking full ownership of their vision. Others are master collaborators, energized by working with a team and bouncing ideas off trusted partners.
So it's not just about what looks good on paper.
Right.
It's about understanding yourself, your strengths, and your preferred way of working.
Yeah.
Maybe a control freak might not be the best fit for a partnership, while someone who avoids conflict might struggle as a sole trader facing tough decisions alone.
Exactly. And beyond individual personalities, the choice of structure can shape a company's culture. A hierarchical PLC might foster a more formal and process-driven environment, while a flat, agile startup might embrace a more collaborative and entrepreneurial spirit.
It's like choosing the right soil for a plant to flourish.
Yeah.
Different structures provide different nutrients and support systems. And understanding these nuances can help businesses grow in a healthy and sustainable way.
I love that analogy.
Yeah.
And it highlights a crucial point. Just because a structure works for one business doesn't mean it's the right fit for another.
Right.
It's about finding the perfect match between the legal framework and the human element of the business.
Okay, so we've covered the technical, the strategic, and now the psychological aspects of choosing a business structure. It's clear that this decision is far more complex and nuanced than it might appear on the surface.
Absolutely. And for anyone out there pondering this decision, my advice would be to do your research, seek expert guidance, and most importantly, listen to your gut. What feels right for you, for your vision, and for the kind of company you want to build.
Well said.
Yeah.
Now let's shift gears a bit
and
bring this conversation back to our listeners.
Okay.
How can they apply this knowledge to understand the business world around them?
That's a great question.
Yeah.
And it leads us to a really fun challenge.
I love a good challenge. What do you have in mind?
Well, I like to think of it as a game of business structure detective. As you go about your day, pay attention to the businesses you encounter.
Okay.
That cozy bakery down the street, the bustling construction company renovating a building, that massive online retailer you can't seem to avoid. Can you guess their legal structure?
Right. Based on what we've discussed.
I'm already picturing myself walking around town, sizing up businesses and making educated guesses. That little vintage clothing store, probably a sole trader. The sprawling law firm downtown, most likely an LLP. A type of partnership designed for professionals. And that tech giant whose logo is plastered everywhere. Definitely a PLC.
Exactly. It's a fun way to engage with the business world and start seeing those legal structures in action. And it's not just about playing detective. Understanding these structures can make you a more informed consumer and even a savvier investor.
How so?
Well, imagine you're considering hiring a contractor for a home renovation project. Knowing that a sole trader bears full personal liability might prompt you to inquire about their insurance coverage and make sure they're properly protected.
Or if you're following a company in the news, understanding its structure can give you insights into its decision-making processes and potential risks.
That's a great point. It's like having a secret decoder ring for the business world. Suddenly those headlines about mergers, acquisitions, and corporate lawsuits start to make a lot more sense.
Precisely. And for those who dabble in the stock market, understanding the nuances of PLCs can help you evaluate a company's financial health and growth prospects. It's all about connecting the dots between the legal framework and the real-world actions of a business.
This has been such an eye-opening deep dive. I feel like I've gained a whole new perspective on how businesses operate and the factors that shape their success.
I'm glad to hear that. And remember, this knowledge isn't just for entrepreneurs or business professionals. It's for anyone who wants to navigate the modern world with a deeper understanding of the forces at play.
Well said. Big thanks to Google Notebook LM for the powerful audio dialogue and AI assistance today. It's amazing how technology can help us explore complex topics like this and make them so accessible.
It truly is remarkable. And thank you to all our listeners for joining us on this journey into the fascinating world of business ownership.
This episode of The Deep Dive was a PLC strategy production. We'll be back soon with another deep dive into a new and exciting topic.
Until then, keep those brains engaged and those questions coming. And remember, every business you encounter has a story waiting to be uncovered. And understanding its legal structure is the key to unlocking its secrets.
And on that note, we'll leave you with one final thought. Next time you walk down the street, take a moment to observe the businesses around you. Big and small, traditional and cutting edge. Think about the people behind them, the choices they've made, and the legal structures that shape their destinies. It might just change how you view the world of business. And perhaps even inspire you to write your own entrepreneurial story.